So into the charts we go, and basically what we have is another consolidation day. Again, the bullish pattern continues to form on the Bitcoin chart. Now, a couple things to note here. Number one, you can see very, very clearly that if we take a trend line and we put it from this high right across, you essentially have this consolidation pattern. And it's creating what I would refer to as somewhat of a wedge pattern, right? So you have this kind of down-sloping wedge. Look at this, and this is where you get what's called a bull flag formation. So you have the up move, and then you can see how this is in the form of a flag pattern. So again, that's how you get that so-called bull flag formation. Now again, the key is going to be that as we come in tomorrow, that's when we're going to hit this time count. Now the time count again should be bullish, meaning that we should see a move up. And what that really means is that probabilities favor a bullish move. Probably about 70 to 75% here. All right, so again, maybe even 75 full out. But bottom line again, you have a bullish pattern of consolidation going into the Fed meeting, which happens to fall on the time count of the chart, which tells you a big move is going to occur. So we're either basically going to have a breakout of this bullish pattern. Upside target is going to be right to here, which is around that 22,400 to 500 level, or if the less probable outcome occurs, which is about a 25% chance, you would have a breakdown, which would then be the beginning of a bigger move to the downside that would have a stopping point right here, but ultimately I think then retests this trend line down here. All right, so again, probabilities, 75% upside, and that's tomorrow on the Fed, with 25% chance of a down move. So again, favoring by a 3-to-1 margin a move to the upside based on the bullish consolidation pattern here after a breakout. And remember, I mean, it seems like ancient history now, but remember, we broke out of this wedge pattern here, and that began this move up. Now, since that move has occurred, you're now consolidating in this pattern, looking to break again to the next leg up, which would take us to about 22,400 to 500. All right, so again, that's really the update on Bitcoin. Quickly, let's look at Ethereum. Ethereum continues to consolidate here. You don't have a time count on Ethereum, so let's be fair on that. So it's not quite as bullish to me as the Bitcoin chart. In addition, upside is somewhat limited with resistance coming in right around 1680, 1680 or so. Now, it's not to say it can't break through there. If it does, you're looking at 1790 to 1800, and then potentially 2000 would be your next level. If it starts to sell off sharply, your support level is pretty clear right here. And again, you're looking at a level right here of around 1375. That would be first support, with second support being this trend line down here. All right, so again, in terms of charts, if I had to pick one, there's no doubt that Bitcoin would be the leader in terms of which chart do I favor or think that has a better chance of a move. And by the way, let's be fair that if Bitcoin makes a big move up, it's very unlikely that Ethereum won't go up as well. The key would be, how much does Ethereum go up? Does Ethereum just go up and slam into this trend line and then stall there, or is it able to break through there? And that's the bigger question mark if Bitcoin does get that bullish move to the upside. All right, so that's where we stand here. If we go to a few of these other charts, let's look at Cardano. Cardano, same thing, consolidating just below this resistance level. You also have this down-sloping trend line. Again, it is bullish consolidation, but the one thing I will say about Cardano's chart is it's not the best of flag patterns. It is a flag pattern. It would fit the criteria of a bull flag, or in spirit of bull flag, but it's not necessarily the best of them, meaning that the best bull flag is going to have the highest probability of a move. This pattern is a lower probability, still favoring above 50%, but I'd put it at about 65%, not fully at 75 or higher, which is where Bitcoin seems to be residing right now. All right, looking at Polkadot real quick. Polkadot, after touching resistance right here, is pulling back, but same kind of thing, still in this upward kind of consolidation pattern. Right now, what you're seeing on Polkadot is you're looking for it to kind of hold this area right here. So you can see all these kind of tops right along here. That's what it's back into, which sets it up perfectly for a potential bigger move come tomorrow on the FOMC. And just for those of you that may not know, the Federal Reserve will give us their rate decision at 2 p.m. Eastern Time tomorrow. What's key about this is, number one, Probabilities have it slated at 75 basis point hike, 88% chance that that's going to happen. So basically that's locked in. I would be shocked if it's anything different. What I would be more watching is what they say about the next one. Do they remain super hawkish? Or do they start to say, hey, listen, we're going to wait a little while, we're going to wait a few months, we're not going to hike in December, and instead wait to see what the economic data and inflation data is going forward. And that's going to be the kicker, folks. I can't stress that enough, that that is going to be the most important thing for this meeting. The market wants a pause. All right, if not a pause, they want a minimal hike in December, let's say 25 basis points. I think 25 in December and then a pause, or a total pause, you get the markets to rally, the dollar falls, Bitcoin goes up. If the Fed says, forget about it, we're still going hardcore, 75 in December or 50 in December, markets are going to sell off. You're going to see the dollar pop. All right, so again, that's my game plan for what I'm looking for in terms of that decision, which is 75. And then again, do they pause or do a very minor one, or do they go guts to the wall, hardcore, and keep it a firm, continued grind higher in rates? Okay, by the way, one little interesting tidbit here today is that early in the day, the stock market was up sharply, and then it started to fall around 10 a.m. when we got the JOLTS numbers out. The JOLTS numbers are job opening numbers, and again, it basically showed that there's a lot of job openings out there, which basically tells us that the labor market is still pretty strong. And the reason why that is a negative is because if the labor market remains strong, that could influence the Fed to not pause on rates. So again, just something to keep an eye on. I don't think it necessarily will impact or change the Fed's position, but I do think it is important to just be aware that economic data will dictate. And the reason why I'm showing you the US dollar chart intraday 10-minute is because based on this chart, you can see when the JOLTS number came out, the dollar ripped higher. And if we go to the spiders, look at what the spiders did this morning. All right, let me get rid of that. Let's go to the SPY chart and look at this drop, right? So again, pretty remarkable drop on the markets. As soon as the dollar took off to the upside, the markets took a dive. Okay, now again, we're not down a big amount on the S&P 500 by any stretch, but we did hit resistance here, so you got to respect that. We did touch this gap fill. We filled this gap here on the SPY. All right, so that's an important thing to keep an eye on. I still favor a pause or a minimal hike of 25 basis points in December versus a 50 or 75, but just be aware that that dollar pop was because the economic data this morning was strong, and that could influence the Fed slightly in their decision tomorrow. It could sway the odds just a little bit. Right, and all we are, by the way, just a reminder, as a trader, investor myself, all I am is a deciphering, even keel eye on the charts that's trying to translate what they're telling us. And that's how, again, we have to be traders. We have to take what the market gives us and look at the probabilities. Okay, going back to Solana here, let's take a look at Solana. Also pulling back, again, just a couple. Yesterday, the high was over 34. We're now down to 32.33. No real bull flag here to speak of, but you'd like to see it hold this level here around this 32 level. If it holds that, you still have a chance for it to pop and break this line, which would take it to about the 38 and change level. If it can't hold that, then you're probably headed all the way back down to 28. So again, tomorrow's a big day for crypto. In terms of Avalanche kissed the $20 level yesterday, pulling back today, but still, again, what a remarkable rally to the upside. I'm still hopeful. Basically, in terms of Avalanche, you want to see it hold this area here, right around this 18 to 1780 level. And again, the hope is that it continues with one more big push up into this range before it stalls out. All right. So again, we'll continue to monitor and see how things go here. But again, everything I'm saying today, it's all reliant on the Fed tomorrow. Even the bullish pattern, yes, it gives us insight on Bitcoin into the likely outcome. But again, just keep in mind, yes, 75% chance it goes up. But again, that 25% chance, if it fails, is probably going to be a big drop. And when I say big, you're talking 1,000 points on Bitcoin or so, which these days is big. I mean, that didn't used to be big on Bitcoin. And maybe that's a positive for Bitcoin overall. It's kind of taming itself a little bit or getting kind of a little bit lower key. which maybe attracts a little bit bigger money. I still think we need to get the institutional money involved to really tame it even more, which will then also push price up dramatically. Okay, so that's really where I'm standing here. If we look at BNB real quick, take a look at that. Look at this, guys. What did I talk about resistance on BNB being? And sure enough, we talked about this level here, and yesterday and today, right into that level. So here was your breakout, and look, right up, and then that's your pullback. Where would you buy BNB? So again, I didn't participate on the upside. I didn't feel comfortable putting money on the line here when, again, we have money on the line already, and everything's going to hinge on the Fed. But if you want to look for a buy, this retrace right to here, 288, 290, would be your buying opportunity. So that'd be a retrace to the scene of the crime. If we look at Ripple today, let's see what Ripple's doing. Ripple's just continuing to consolidate, a lot of sloppy consolidation here in the chart. And again, from what I heard, November 15th is a big day for Ripple in terms of the price action of the judge's decision, or essentially the judge's decision. So watch that. And again, likely that's going to, again, be a huge move. And by the way, not only is that big for Bitcoin and Ripple and the rest, I mean, it's basically big for all crypto because it's going to set a precedence. So whatever the judge decision is, that is going to be the key. And again, you know, with me, I'm with you in terms of being a spectator on this front. We'll look at a couple others here. Take a look at Matic real quick. Matic coming back in. Notice how it could never get out of this upward channel. Support is going to be around 85 cents, which would be the low end of the channel. Just be a little careful. Upsloping channels eventually break to the downside. And again, you've hit it enough times where I would not be a buyer here, but instead I'd be a buyer here. So 76 cents or so, that would be where you have more support there. Quant, nothing much going on here, is putting in a bear flag. Quant is putting in a bear flag here. That's a classic down move inside bar. So that likely is going to trade lower, which to me is good because I would like to buy it really around 120 to 130 right down here. I think that would be a nice little retrace opportunity to be a buyer there. Let's take a look at Chainlink as our last one. Chainlink, look at that trend line. I mean, it's just absolutely amazing. Pivot to pivot. It pierced it. It probably coaxed a lot of money into the trade there, thinking it was a breakout. Don't ever trust it unless it confirms, and right back in it comes. So that's where we stand, guys. Again, I don't have much else for you today. Let's all watch for the Fed tomorrow at 2 p.m. I will be doing my video after that so that we get, obviously, I can dissect what the Federal Reserve does and how the markets react. But it should be a wild one, I will tell you that. I do expect it to be a wild one. You guys have a good one. Take care.